Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Tuesday, March 1st, 2011. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London, 12:30 in Hamilton, and Mexico City, it's 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, or AOL Instant Mail address is CATEX-TV. Today's birthday, Roger Daltrey of The Who, My Generation, is 67 years old. He was born in the Hammersmith area of London. We'll go to our main news. Well, I'll tell you, this has been a slow and steady drumbeat. Now we're getting some particulars. The Financial Services Authority faces the prospect of receiving more than 500,000 pages of material from companies seeking approval under Solvency II. This is highlighting the challenges facing supervisors in the run-up to implementation of the new EU capital regime. There's an article in Insurance Day today written by Richard Banks. Hiscox said its application for approval under Solvency II is likely to reach 5,000 pages. And they say that the FSA expects now to receive more than 100 similar applications. That's 500,000 pages. Our friend Branak Mosajada, the chief executive of Hiscox, said one has to feel sorry for the teams who have to read and approve all the applications. No kidding. Robert Hiscox, chairman of the company, told Insurance Day that Hiscox had 50 staff members working on the Solvency II application. Hiscox said this has made the non-executives very happy. Every single possible risk in the organization is being documented and mathematically calculated to go into a model. Hiscox said that while the application for approval under Solvency II required considerable resources, he didn't think he'd have to put up any more capital under the new regime. He also said that instinct would still be important in making business decisions going forward. He said, "What I fear is always the unknown that smashes you. And we have to keep using our instinct to find the black swan." Hiscox also said, he followed up on what he said yesterday. He said, looking at the wider market challenges for the year ahead, he said, "I would like brokers to charge their clients a proper price for what they do and not just try to get paid by us. And I would like underwriters to show proper pricing discipline. I'm all in favor of regulation when it stops my competitors being foolish." The second day in a row he's been on the brokers. Well, the long-awaited Risk Management Solutions new model is out. And boy, oh boy, is it everything they promised. It shows that wind risk for all hurricane-exposed states in the United States is expected to increase on an industry-wide basis. Claire Sauch, Vice President of Natural Cat and Portfolio Solutions at RMS, said significant information gathered over several years had changed the modeling firm's view of a number of regions at risk from hurricanes. She said, quote, "Texas and the Gulf states now contribute more to the overall risk profile than before. The change in the model is expected to lead to a significant increase in probable maximum loss values for risks in Texas and some other areas of the Gulf. That means an increase in premiums. A considerable amount of the RMS data on building performance was derived from Hurricane Ike, which revealed some unexpected trends in building performance. Ms. Sauch said claims analysis from Ike reveals that roofs were damaged at much lower wind speeds than expected. Following the results of our analysis, we worked closely with engineering consultants to re-examine code enforcement throughout the U.S. hurricane states. What was surprising about Ike was the amount of wind damage given the relatively low wind speeds. Although we knew standards differed, building standards differed in Texas to Florida, and we knew that there were issues with the enforcement of building codes, the extent of those issues was not known before Ike. The extent of the roof damage we saw should not have happened at those wind speeds. Another factor in RMS's data that came out of Ike was the rate at which storms weaken as they move inland. It's not quite as fast as they had previously been estimating. This means that while risk along the immediate coast hasn't changed that much except for the roofs, the further inland will be greater under the new models than in previous models. So, and that's just for wind speed. Now we'll see what happens. They're releasing this seemingly in segments, but the industry's been waiting for this for many, many months. Speaking of wind in Texas, the Texas Department of Insurance has placed the Texas Windstorm Insurance Association, known by its acronym of TWIA, under administrative oversight. This is after an investigation found that the state-chartered privately run company had paid adjusters for work they hadn't done and had paid claims based on the reports that hadn't been done. The insurance department said that the oversight was not intended to be permanent. In December 2010, TWIA's top claims officials resigned. TWIA is the insurer of last resort for Texas homeowners unable to get hurricane protection in the private sector. The company is going to remain under the insurance department's oversight until the commissioner determines that the company has satisfied the specific requirements. Standard & Poor's has made a move. A P&C unit of bailed-out AIG was downgraded. S&P said that it lowered its ratings by one notch of Chartis, went from A plus. Here we have it listed as AM Best. I apologize for that. It was Standard & Poor's. Last week, Chartis reported an operating loss of $4 billion, although the parent company AIG reported income of about $11 billion for the fourth quarter. Most of AIG's income came from asset sales. The company doesn't have that much to sell anymore. It's going to have to rely on its core business going forward. AIG consists predominantly of two businesses, Chartis, which has been downgraded, and the life insurer Sun American Financial Group. Getting some more Bermudan claims estimates now, Validus Holdings said yesterday that it expects to post losses of $25 to $50 million as a result of last month's 6.3 magnitude Christchurch quake. Validus made the estimate on the assumption that insured industry losses from the quake will range between $6 billion to $7.5 billion. That's pretty light. The group said that data on the quake losses was far from complete, but that losses would certainly top those from the 7.1 quake that hit Christchurch in September. Validus said that losses from other Q1 cats, including the Australian floods, Cyclone Yasi, and civil unrest in North Africa and the Middle East, would have no material impact on shareholders' equity. Meanwhile, Flagstone, down the street, said that it would post losses of $60 million to $80 million from the Australian floods and Cyclone Yasi. Flagstone said that it was too early to issue a loss estimate for the recent New Zealand quake, owing to significant unknowns in the early stages of claims reporting process. So without the quake of 2 weeks ago, Flagstone is still saying $60 to $80 million in losses. Stock market in New York is down. Ben Bernanke was in front of one of the congressional committees earlier, expressing confidence in the economy, saying that some degree of controlled inflation is to be anticipated in the near future. We'll go to a word from our sponsors. Jardine Lloyd Thompson, one of the last of the independent brokers, had a good year. They reported an underlying post-tax profit of a little over 88 million pounds. It's about 144 million US for 2010. That's up 21% from '09. Total revenue grew proportionally up to 746 million pounds. It had been 619 million in '09. JLT reported a growing contribution from so-called high-growth economies in Asia. Asia generated organic growth of 20%. Latin America generated organic growth of 20%. Even London market revenue was up 12% year on year. It reached 306 million pounds. The trading profit in London reached 65 million pounds, up from 53 million. The total dividend for the year will be about 22.5 pence a share. That's up 7% from last year, so congratulations to them. Well, it's always interesting when the European Court of Justice meets in Luxembourg. What they came out with is sort of an unusual ruling. It's a ruling that has been seen in the United States in many instances as it applies to automobile insurance. Namely, that you shouldn't take gender, age, or actual residential address into consideration when making your rates. Everybody should be treated equally. The problem with that is that everybody knows that women live longer than men and they're safer drivers than men, so they tend to get lower insurance rates. No more, not in Europe. Insurers will not be allowed to take gender into consideration when calculating premiums. This is according to the EU's highest court. The present system, said the court, quote, works against the achievement of the objective of equal treatment for men and women and should end by the end of next year. Auto insurance premiums for female drivers could rise as much as 50% as a result of the ruling. It will also result in insurers changing the way they market policies and assess risks to ensure that they get only the better performing female business. The ruling flies in the face of common sense, said one person. It's completely disadvantageous to the very people it was intended to protect. This is from Adrian Brown, chief executive of the London-based RSA Insurance Group, the UK's biggest non-life insurer by market value. Consumers are going to have to pay the price for an illogical change in the law. He means women. Men's rates will go down a little bit. Decisions by the Luxembourg-based European Court are binding and they cannot be appealed. Oh my. Well, for the final story, I didn't give it today's update on Libya because it's too difficult to see. It's Gaddafi's forces. Nobody knows how big they remain in size, fighting against the resistance. The resistors apparently have obtained pretty full control over the oil production capacity in the eastern part of the country and may begin to reap revenues independently from that. Yemen is still having difficulties. Protests have appeared in Iraq, of all places. Ahmadinejad in Tehran still has his thumb firmly on the valve there. There's not too much protest going on. Bahrain is still protesting. Oman is still protesting. But nothing yet has been heard from Saudi Arabia. Now, driving to work today, I saw gas prices in the United States at about $3.40 a gallon for regular. If something begins to happen in Saudi Arabia, that price is going to go way, way up. An interesting event happened today. Saudi Arabia's TASI stock index saw its largest drop in 2 years today. It plunged to a 20-month low. This is after authorities detained one man, a Shiite cleric, in the eastern part of the kingdom. This raised fears that unrest that's currently spreading across the Mideast could spread to Saudi Arabia. The Saudi index fell about 7%, its biggest drop since November of '08. Here's some quotes. This is from a Riyadh-based analyst, a stock analyst in the Saudi exchange. Quote, everyone is getting out. You see what's happening in Muscat and in Bahrain? People are scared this will happen in Saudi Arabia as well. He said it's a surprising fall, that means the market dip, but it has nothing to do with the economy of Saudi Arabia or business here. It's all about the unrest and concerns in the region. It's all politics. Hello. Shares dipped following a Reuters report that Saudi authorities had detained a Shiite cleric in the eastern province after he called, get this, a constitutional monarchy, i.e. the king and the royal family can stay in place, but some assembly is the one actually making the laws. The chief executive and fund manager at Gulf MENA Alternative Investments in Riyadh said reports of some arrest of a cleric sparked the drop. There's now a big fear of this contagion spreading to Saudi Arabia. Things are not completely clear as stocks continue falling. There's no clear answer at this point. He went on to say that there are several rumors out there, and it looks like investors of all class and type are shunning the markets. No single person, no single portfolio can move the markets to this extent. This is a complete shock. Wow. They're going to be surprised when it spills into that area. And so will we, because the gas prices are going to go way, way up. Very interesting. These are interesting times in which we live. Stock market still down about 46 points right now. If we have any breaking news, I'll come back and tell you. If not, we'll see you tomorrow, and thank you for watching.